Our next guest, though, says we need to see 4 key developments to indicate a more sustained recovery from April's lows is, in fact, intact. Let's bring in Morgan Stanley Chief U.S. Equity Strategist and CIO, Mike Wilson. It's nice to see you.
How are you, Scott?
So I'm good, thank you, and it's great to have you here. So we need to see 4 things. I don't like doing lists like this because, I mean, it puts you on the spot. If you forget something, it's on you, not me. But what's the 4?
Yeah, so, I mean, it's not all 4, but we need to see some combination of these 4 things. I'd say the first one is some deal on tariffs with China.
Okay.
That's the one that matters.
All right, check.
Okay.
We'll
Number
see.
2, dovish Fed.
Okay.
Where they kind of get off the stick. Okay, number 3, we see rates come down in a more meaningful way, the back end of the market, without growth really deteriorating. Okay, and then the 4th one, which is probably the most important for stocks, is earnings revisions. Earnings revisions have been on a downward trajectory for quite a while, but if that were to turn up, so maybe 1 or 2 of those together, we could see a breakout of this range we've been stuck in.
Does that suggest that you're not yet convinced that this rally back, 8 in a row, I think we're going today on the S&P, is sustainable? Well,
I would say this. The lows could be in. Okay, we priced a lot of damage at 4,800 on April 7th. There was a capitulatory move. I think the wild card now is, are we going to have a recession? Okay, and I think, our economists would say it's a coin toss. It's a 50-50. I think most of your guests are probably in the same boat. I mean, I think most commentators, we just don't know. And if you don't get a recession, the lows are in, okay, for the year. If we get a recession, you probably got to do a full retest, maybe a slight break, okay, and that would be a labor cycle. That's the only way to define a recession. It's a labor cycle. All this stuff about negative GDP, I don't care about that. I care about, do companies start laying employees off in a way where you get a next round of revisions that become more serious?
We both know, for obvious reasons, we're not going to have an answer to that question for a while. Does that mean that we just chop around things? We may have some volatility come back. We feel like it's been this nice little sanguine move higher. Everybody's feeling good. As Adam Parker was just saying, everybody was so negative. Now everybody's feeling so much better about everything. But are we due just for more choppy?
That's basically our call. It's a range trade, right? So the low end of the range is sort of 5,000 to 5,200. Upper end of the range now is 5,500 to 5,600. That's a pretty good range to think about in S&P terms. Now, a lot's going on under the surface as usual, right? So a lot of the economically sensitive parts of the market have been correcting for almost a year, right? They've been in a downtrend for quite a while. That's where the value is. The problem is you can't really step into a lot of those stocks if a recession is still 50%. So, yeah, it's going to be a trading environment. There's probably some franchises you can kind of go back to that look a little bit more interesting. The weaker dollar is helping the multinationals now. I mean, that happened with Microsoft and Meta last night for sure. And that was sort of our view coming into this week that, don't forget about the dollar. The dollar has made a big adjustment, and that can help earnings growth.
If it stays, the dollar index is up quite nicely today.
Yeah,
right? It's a pretty big move for a single day.
But the trend is down. I mean,
you still think so?
I think the trend is down. I think we've made probably a multi-year top in the dollar. The dollar is overvalued. That doesn't mean we're going to crash in the dollar, but gold's been telling you now for a long time that the dollar, all currencies are somewhat overvalued, and the dollar in particular relative to other currencies. So that's probably the thing I have the most conviction in, is that the trajectory of the dollar is weaker, and you can't get too bearish on the multinationals because that's helpful for earnings growth.
I mean, I find from people saying now you just can't get too bearish on anything because there could be a deal, whether in quotes or not. I mean, anything could happen that flips the switch to a more positive outcome. Just as people feel like they're foggy, well, the fog could lift pretty quickly, don't you think?
Well, I think that's what we got, right? So we had a pretty nasty sell-off. We did see some pivoting on the tariffs, some headlines that were more favorable, and that's why we're up 700-800 points in a straight line. So I still think this range will hold for a period of time. I'm not convinced that this is a sustainable rally beyond 5650, which you wrote about this week. I think retesting the low end of the 5,000 range is feasible even without a recession. And, of course, if you get a recession, then all bets are off.